A ship sailing towards wealth, with the vast market ocean guiding its path. Dive into the world of index funds, where simplicity meets exponential growth. The allure of the stock market often draws us in, but with thousands of stocks, where do we even begin? Enter index funds, a tool to capture the market's essence and your ticket to potentially consistent returns. Curious about what these index funds truly entail? Let's unravel the mystery. 1. Index funds demystified. Index funds, the mosaic that mirrors the market. Imagine trying to capture the essence of a bustling city. You could focus on one beautiful building or a charismatic street performer, but that wouldn't give you the entire picture, right? Similarly, when it comes to the stock market, betting on a single stock is like focusing on that one building or performer. On the other hand, index funds offer you a panoramic view. Acting as a type of mutual or exchange-traded fund, they're crafted with precision, following preset rules to track a specific basket of underlying investments. Instead of narrowing your vision, you're investing in the vast landscape of a market segment, achieving instant diversification. This approach ensures that your investment destiny isn't tied to the fortune of a single entity, but is spread across multiple players, cushioning you against sharp downturns. But how does this diversification benefit you? 2. The power of diversification. Don't put all your investment eggs in one basket. The art of investment is often about balance, and diversification is its masterpiece. Consider a trapeze artist. It's the safety net below that allows them to take daring leaps, knowing they have a fallback. Diversifying your investments through index funds serves a similar purpose. By sprinkling your money across a diverse array of stocks rather than heaping it onto one, the impact of one stock plummeting gets diffused. It's akin to having multiple anchors steadying your ship during a storm. Index funds inherently capture the essence of diversification. They minimize the turbulence of individual stock volatility, shielding you from the aftershocks of any single stock's dramatic downturn. In doing so, they pave the way for potentially more consistent and more stable returns over an extended period. With stability in mind, what's the cost of investing in these funds? 3. Cost-efficient investing. More gains, fewer drains. Every cent saved in expenses is a cent earned in investments. Index funds have gained a reputation for being a more cost-efficient way to dive into the investment pool. But why is this the case? The secret sauce lies in their passive management approach. Unlike actively managed funds, which employ fund managers to handpick stocks, scrutinize market trends, and make buying or selling decisions, index funds simply mirror the performance of a predefined market index. This set-it-and-forget-it style eliminates the need for expensive investment analysts and constant portfolio adjustments. The result? Significantly lower operational costs. These savings directly translate to lower expense ratios for investors. Thus, by investing in index funds, you're not just minimizing risk through diversification, but also maximizing returns by keeping more of your money invested rather than spent on fees. Low costs are enticing, but how do they achieve this? 4. Passive management. It's not about beating the market, but being with it. Dive deeper into the world of investments, and you'll encounter a whirlwind of strategies and approaches. One such approach is passive management, the hallmark of index funds. Instead of trying to outsmart the market with predictions and stock picks, passive management goes with the market's flow. Index funds operate on the principle that, in the long run, the market as a whole will grow, and attempting to beat it often results in unnecessary risks and costs. By simply replicating a market index, these funds minimize the need for frequent buying and selling. This not only translates to fewer transaction costs, but also means that the fund isn't shelling out huge sums to employ top-tier stock pickers. All of this creates a cost-effective structure which, when combined with the historically consistent growth of the market, offers attractive returns. So, with this passive approach, how do returns fare? 5. Consistent returns. Ride with the market tide and let the returns abide. The allure of index funds isn't just in their simplicity, but in the results they've historically delivered. While the world of stock markets might seem like a tumultuous sea, index funds serve as sturdy ships designed to sail smoothly with the currents. By reflecting the broader market, these funds inherently share in its growth. Over decades, the market has shown a general trend of upward growth, despite occasional downturns. And here's where the beauty beauty of index funds truly shines. Instead of chasing fleeting market trends or the next big thing, they offer investors a piece of this overall growth. What's even more enticing is that when compared to their actively managed counterparts, index funds often come out ahead in the long run, especially when you factor in the lower costs associated with them. Convinced about the returns, but wondering where to start? 6. Choose your index. From global giants to tech stars, which market slice excites you? The world of index funds is as varied and diverse as the global market itself. Are you enamored by the tech innovators in Silicon Valley? There's an index fund for that. Intrigued by emerging markets and their vast potential? There's an index for that too. Perhaps you believe in the stability of the old guard, the blue-chip companies that have stood the test of time? Guess what? There's an index for them as well. The beauty of this investment avenue is the flexibility and choice it offers. It empowers you to align your investments with your beliefs, interests, and financial aspirations. It's like walking into a gourmet restaurant and having the liberty to design your own dish. But remember, as with any gourmet dish, the key lies in picking the right ingredients. Once chosen, how easy is the entry? 7. Simple and accessible. No barriers, just open doors. The allure of index funds is not just in their potential for consistent returns, but also in their sheer simplicity. Think of them as the friendly neighborhood of the investment world, welcoming, unpretentious, and accessible to all. Whether you're a seasoned investor with a diversified portfolio or a college student taking your first tentative steps into the finance world, index funds roll out the red carpet for you. Modern technology amplifies this simplicity. Numerous online platforms, apps, and brokerage firms make the process of buying into an index fund as easy as ordering a book or a gadget online. There's no need to wade through complex jargon or intricate procedures. Just a few clicks, and you're part of a vast financial tapestry that spans sectors, industries, and even countries. Easy entry, but what about the long journey ahead? 8. Long-term vision. Patience isn't just a virtue, it's an investment strategy. The stock market is much like the ocean, with its calm days and turbulent storms. But those who set their sails with a distant horizon in mind often find their journey rewarding. Index funds embody this principle of looking beyond the immediate. While daily market news might cause ripples, these funds are designed for the bigger picture. They thrive on consistency, mirroring the broader market's trajectory. Investors who align their mindset with this principle, those who resist the urge to jump ship at the slightest hint of a storm, often reap the benefits. By staying invested through market highs and lows, they let compounding work its magic, allowing their wealth to potentially grow exponentially over the years. And in this enduring voyage, what should one avoid? 9. Avoiding common pitfalls. Every journey has its pitfalls. It's about navigating with caution. The road to investment success isn't always smooth. It's sprinkled with temptations, misconceptions, and missteps, waiting to trip the unsuspecting traveler. One of the most common pitfalls is letting emotions dictate investment decisions. The stock market's highs can be exhilarating, while its lows can be terrifying. Yet, reacting impulsively to these movements can be detrimental. Another trap is chasing past performance. Just because an index did well in the past doesn't guarantee future success. Lastly, neglecting to periodically review and rebalance your portfolio can leave you exposed to unwanted risks. Being aware of these pitfalls and maintaining a disciplined, informed approach can help you stay on track and move steadily toward your investment goals. Charting the course is essential, but isn't there a compass to guide? 10. Seeking expert guidance. Even seasoned sailors sometimes need a guiding star. While diving into the world of index funds can seem straightforward, the financial seas can get choppy. Navigating the intricate waters of investing sometimes requires an expert touch. Financial advisors, with their deep market knowledge and expertise, can provide insights tailored to your unique financial situation, goals, and risk tolerance. They can also assist in crafting a diversified portfolio, ensuring that your investments align with your long-term objectives. Think of them as your financial compass, guiding you away from potential pitfalls and towards prosperous shores. Armed with expertise and strategy, are you ready to set sail on your index fund voyage? Knowledge is your guiding star in the vast investment cosmos. Embrace continuous learning, understand the indexes, monitor global events, and stay updated on economic indicators. With knowledge in hand and patience at heart, the world of index funds offers a galaxy of opportunities. Ready to start your index fund journey? Dive in, invest smartly, and let's grow together. Like, share, and subscribe for more insights.